Newsletter, the Greed and Fear, noted analyst and part of Jefferies, Chris Wood, has actually written quite extensively as far as India is concerned, the Indian equity markets are concerned. He also shares his thoughts on the banking sector. He shares his thoughts as far as the moratorium is concerned, and also specific to Reliance Industries as well as HDFC Bank, two of India's largest heavyweights, are something that he shares. What he is saying at this point of time is that with regards to COVID, and this is something that he's been saying for quite some time, he believes that the number of deaths is something that is far more important compared to the number of cases. And with regards to India, he notes that the India death rate has declined from a peak of 3.4% in mid-June to the current 2.4%. He also notes that since the reopening of the economy, certain high-frequency data points have seen a significant amount of bounce back after the lows that they witnessed during the lockdown. He's saying that the economic activity in urban areas, however, has continued to remain weaker compared to rural areas. He believes that rural areas are relatively insulated when you're comparing the spread of COVID-19 in urban versus rural. The other important and key factor that he believes is quite cheerful as far as India is concerned is that the monsoon activity is something that continues to remain above average. He speaks about the Indian stock market, and he believes that Indian stock markets are rallying quite significantly on the back of the fact that the reopening narrative that is aiding global markets to rally is something that is also aiding India. Now he has spoken about the domestic mutual fund inflows, and this is something that he believes is a slight negative. He believes that domestic mutual fund inflows turned negative in June for the first time since November 2019, and this is a trend that he would be tracking quite closely. Now comes a very important part. He shares his thoughts as far as the loan moratorium as well as the banking sector is concerned. He believes that the key issue as far as the economy and banking sector is concerned remains the future policy as far as loan moratoriums is concerned. He states that the banking sector, which includes NBFCs, constitute almost 19% of the MSCI India index, and he is worried that moratoriums which are large to end and which are hard to end is something that could probably lead to a consumer lending NPL cycle. He states that most of the Indian banks have been quite prudent and have taken advantage of the recent stock market rally to announce capital raisings. However, the other sector that's been impacted quite significantly is the Indian residential property market. And very important change that they are made as far as the Greed and Fear portfolio is concerned is that they no longer have Indian banks in the Asia ex-Japan long-only portfolio. He speaks about the INR. He says that the weakness in INR has been partly offset by the rising foreign exchange reserves, and he's very thankful that the portfolio has Reliance Industries with a 6% weightage, given the fact that most domestic mutual funds are still underweight the stock. So he believes that there could be a further rally, and do not be surprised given the fact that a lot of domestic mutual funds still are quite overweight. So in case they start increasing their position, or in case they're forced to increase their position, you could see some further upside or legs as far as the RIL rally is concerned.